we're very clearly seeing that even though it's holiday action, it doesn't mean the markets are going to go up. There's volatility coming into play here, and we have to be ready to trade it. But notice how as soon as the stock market began to cascade lower, Bitcoin then sold off, and then as markets have kind of bounced towards the close here off of their lows, Bitcoin has bounced as well. Now we go into next week, which again is a holiday week. Will we still see selling, or will it start to float, and will the selling then wait till January?
The markets are flashing red, and Gareth Soloway is sounding the alarm. With the Dow, NASDAQ, and S&P tumbling, institutional investors seem to be preparing for something big. Could January 2025 bring the crash everyone's dreading? Gareth breaks down the technical key price levels and hidden risks that could send markets spiraling. Stick around to uncover what's next.
Again, there was some interesting price action that I want everyone aware of going into next week. So number one, markets were down today across the board. In fact, let's follow us over here and we'll take a look at what the indices did. So we have the Dow down about 276, about 0.6%. The NASDAQ dropping 1.75%. That's a big drop there. The S&P down about 1% or 60 points. Now, in today's game plan, we talked about how it could be just like yesterday. The markets were opening lower and they would just gently float to the upside. But we got a different change here. And I think part of this is that there's beginning to be a little bit of a nervousness going into January. I think the institutions early in the day were like, listen, we got to start exiting this market because things are on their last leg. And we did see that again across the board. Look at the red today on the heat map. Just a ton of red, from Nvidia down 2.4% to Microsoft down 2%, Google down 1.7%, Amazon also down 1.7%. But you can see the red out here. This is not a small based rally. This is a broad-based decline across the board. Now again, the kicker here is this. If you just look at the technicals were the key here. So here we have these two lines, and I talked about this in the game plan, and we talked about right here, right at this level. So here you have a chart, and again, the low pivot, and we continue to hit. We broke down, and look, right there, that arrow pointing to that level, and there's your decline today. So this is the beauty of it, right? And so this morning in the game plan, I was kind of saying to myself, the charts are saying we're going to sell off, but the problem is the light volume. If it's just retail's going to be buyer. No. The charts are always in charge. Remember, Charles in charge? Well, here the charts are in charge. And sure enough, right down we go off that key resistance level, all right? So again, think about what's going on. We have snap elections now in Germany. We obviously have everything that's going on in France. You have Middle East tension, Yemen getting bombed by Israel now. There's all these things with Iran going on. There's a lot of things, and this is all coming into Trump taking over the presidency with potential tariffs, and these are all making these investors more and more nervous. So I don't think retail was selling today, to be honest. In fact, if you look at Rigetti Computing, that supercomputer stock, up again today, not up a ton, but up as well. But again, it's more institutional money is unloading. All right, we got to go through a couple of these other charts here, just showing again the levels. We can see again, here's your NASDAQ chart, folks, and the NASDAQ chart continues to show us that we are right at a major high. There was that dip, that wide range red candle, the bounce back, and now the sell-off here, and we are seeing the NASDAQ down about 1.78% on the day. So that's a pretty hefty drop. Again, not erasing the entire gains for the week, but really giving back a majority of those. It was looking like a great week, not so much now. And then take a look at Tesla today. So Tesla had been rallying the last couple days until yesterday when it had a little reversal day. Look at today. It's going to end right on this trend line, the parallel trend line. And that, my friends, folks, if this breaks next week, you're headed back to about $360 a share. Now, let's talk about this, right? So we have to remember that next week is another holiday week. Wednesday, the markets are closed. Monday and Tuesday, normal trading hours. Thursday and Friday, normal trading hours. But again, we're very clearly seeing that even though it's holiday action, it doesn't mean the markets are going to go up. There's volatility coming into play here, and we have to be ready to trade it. So again, for me at least as a trader, I'm zeroing in more than anything else now because of today's price action and because the charts are paramount and fully in charge regardless of the holiday volume. And this still sets me up, in my opinion, for something that big will happen in January and February that will likely send this market cascading a lot lower. The breadth of the market remains horrible. So many underlying factors, valuation, standard deviations away from the norm, all of these things should be taken into absolute account.
Gareth shared today's critical market movements, from the Dow dropping 276 points to the NASDAQ's sharp 1.75% decline, The red heat map signals a broad-based sell-off. Technical charts, like resistance levels breaking down, paint a bleak picture. He highlighted geopolitical pressures, institutional unloading, and looming volatility. Even Bitcoin, which initially resisted, eventually followed the market's plunge. Despite light trading next week, Gareth predicts that January and February could bring catastrophic market declines. Stay tuned for his bold predictions for Bitcoin, commodities, and the next key moves.
All right, now going to Bitcoin. Bitcoin this morning, when we looked at it in the game plan, we were seeing it up on the day. Again, even though markets were down slightly, it was up on the day. But notice how as soon as the stock market began to cascade lower, Bitcoin then sold off. And then as markets have kind of bounced towards the close here off of their lows, Bitcoin has bounced as well, to the upside. So again, looking at the chart here on Bitcoin, what we can see very clearly is that, again, we have continued to come down. We're still hovering between 100K here. So 100K is resistance and 92K is support. And again, we are having a second down day in a row going into the weekend, but notice how once we broke into this range from here to here, it's just been chopping down, up, down, right? So the idea is, what type of pattern is that? If I were to draw this like this, that's a bear flag pattern. It favors the downside. Now, it doesn't guarantee the downside. We could always break above 100 and confirm, but right now the pattern formation on Bitcoin has a negative bias to it, okay? And again, if it breaks down, there's really an air pocket, as I've said before, all the way down to about 75, 74, 73,000 on that chart. Now, we are seeing Apple here down a little bit on the day. I told you I picked up some puts. I'm basically flat to slightly in the money on these puts at this point. Again, I have my first target down here on Apple at around 236, 237, pivot high here. I think this is something we could reach in a matter of just weeks into early 2025. And then I'll hold some of my puts for that bigger move to the downside that likely we go all the way back to about the 200 even number right back here. Again, notice how if we take a look here at this high and we drag it through, look at this, right to that low. So that tells us there's going to be major technical support at that even number of 200. Look, we can look at RGTI, which is just really astounding here. But I will say that you likely have put in a top on this. We day traded this in the live trading room today, and it was a fantastic trading opportunity, and we banked great money on it. I want to just show you this chart here. So take a look. This is a level that I had today. It was at basically $18. $18. So what I did was I took the pivot high here, which had a big sell-off, and it was from $8 down to basically $6, and then the next rally took us up to 12, almost 13, and then back to 6 right here. And we take that high and connect it through, and look at what we get here on the 10-minute chart. So right here is where I started to short Rigetti, and look at the pullback. We went from essentially getting as high as about $19 to reversing back down here to about 15 and change, making a nice score on that day trade. Now, in terms of a swing, is Rigetti a short? The answer is a little bit more complex. As a swing trader, yes, eventually it's going to come in, and it probably comes in 50-60% from these levels, maybe more. In the short term, do we know what it's going to do on Monday or Tuesday? We don't know. And so again, as someone who might be looking to short it, you just want to be aware, keep position size small, because you'll have to potentially weather some big moves in the stock before it comes in. Gold today down on the day here. As we look at gold, and if we flip back to the daily chart, we kind of have this area right here. It was down, basically erasing yesterday's upside. I added in a new trend line right here, folks, from this low to this low here, right through these lows, and that actually marks that exact low. Then you have the parallel right here as well. We're just hovering in this support range. Like I said this morning in the game plan, there's really no telling, are we going to kind of rally off this level and go back up and retest this 2720 level, or is this potentially a bearish pattern? Again, I don't have a strong bias, so I'm just going to leave it and let the charts tell us in the next few days. Silver, though, I've talked about the bearishness on silver, and it looks like we're starting to break down. Down move outside of this bearish consolidation, we broke down. Bearish pattern, look for this downside level. I'm going to still stick with my 27.5 downside target. Oil, I've continued to be bullish on all week. It was up today in spite of most commodities being down. Not up a lot, but it still continues to hold above this line, which gives it that neutral to upside upside bias to about 73. And then lastly, natural gas flow, not doing much today, just again chopping around and stuck between resistance up here and technical support there. The data is telling us that markets inevitably are going lower. Now, whether or not they float next week around the holiday, we'll have to see. A lot will depend on how much institutional urgency there is for them exiting their positions. We've seen this for months now, how early in the day selling comes in. In fact, that was when it was, right? The low of the day was hit at 12:30 to the minute Eastern time today. To me, that doesn't tell me, oh, retail was selling, because it wouldn't be exactly at 12:30, right? And just like we've seen before, it was like 10:30, 11 o'clock, right? When it's specific times, it means they have programmed it into a computer and the switch turns off the sell volume. So again, institutional involvement, minimal, but enough to cause a sell-off today on this Friday. Now we go into next week, which again is a holiday week. Will we still see selling, or will it start to float? And will the selling then wait till January? But either way, folks, at least per the charts and data, which is all I care about, we are looking at some major downside coming into January and February 2025. All right.
Gareth Soloway's insights reveal a storm brewing across markets, with January 2025 looming as a critical turning point. Whether you're trading stocks, Bitcoin, or commodities, understanding these patterns is essential. Don't miss the chance to prepare for what's ahead. If you found Gareth's analysis valuable, hit the like button, subscribe, and share your thoughts in the comments below. Let's navigate these markets together.